Hello and welcome to Connect, the weekly podcast of the California MBA, featuring one-on-one interviews with movers and shakers in the mortgage industry. I'm Susan Milazzo, CEO of the California MBA, and happy that you could join us today. Before I welcome today's guest, I'd like to thank our 2024 President's Council sponsors. Now, these are companies that provide a tremendous amount of financial support for our organization, in large part so that we can continue to be the strong voice for the real estate finance industry before the California State Legislature and our regulators. So please join me in thanking this year's President's Council sponsors. And those companies are AmeriHome, Arch MI, Consolidated Analytics, CMG Financial, Funding Shield, Guild Mortgage, and Western Alliance Bank. Thank you all so much for your support this year. We really appreciate it. And that brings me to welcoming today's guest. I'm happy to have Jeff Flory, the CEO of QC Ally, as our guest today. Jeff, welcome.
Thank you very much, Susan. Appreciate it.
I know you have been a guest on Connect before, so thank you for making some time to join us again. Always great to catch up with you. We are about halfway through 2024. Be interested to hear kind of what's the word you're hearing from your clients about what their expectations might be for the market for the balance of the year.
Certainly. Well, and first of all, I guess I got to thank you for allowing me the opportunity to join you again. I think the last time I was on Connect with you, it was back around September, and I was fresh into my role here at QC Ally. I was probably a little wide-eyed at the task that was in front of me in basically helping me shepherd this organization through the lingering tail of what has been a very tough mortgage market. And looking back, I think I can tell you that I was very fortunate not only for the opportunity to lead this organization, but more importantly, I was very fortunate that I had a very seasoned team of executives that really knew their roles and what they needed to do, and it afforded me the opportunity to get to know them as individuals and how they operate. And having a solid team in place allows me to focus on strategy of the organization, the longer term vision of the firm, and essentially moving from kind of the dance floor to being on the balcony. Now, in the intervening period between today and when we last spoke, the industry, as you know, has seen its challenges. And while the last few months have been positive and have been very promising, expectations about what this year is going to look like have been a little bit more measured and tempered. Where I think we're at today is that the market is really in what I'll call this acceptance phase. And if you look back to January, and I'm not sure how everyone else was feeling, but I was very optimistic. All the news that was out there basically signaled that, hey, we're going to see rate drops by March. We were going to have this mortgage renaissance, if you will, in the spring. And as the financial news kept coming out and that renaissance didn't manifest, I think folks were pretty much like, oh, okay, well, that's how it's going to be. And this acceptance turned into kind of a determination to make the most and the best of this market. And if you follow the posts of market leaders, and I'm going to Greg Scher at NFM, I think Scott Reese at Atlantic Bay, Kevin Peranio at PRMG, just to name a few, there's a very, very consistent message, which is the grinders got to keep grinding, the hustlers got to keep hustling. And I think we're finding ourselves in a place where we're doing all the things that we need to do to be as successful as we can, notwithstanding the stubborn market forces that we face. And I heard that a lot. I was down at the Legal Issues Conference in San Diego last month, and I heard that a lot. Comments like, hey, things are looking up. We feel like we're well positioned, or we still have a focus on growth as this year progresses. It was uplifting to hear, and I think those attitudes and the underlying action that accompanies it will be having much different and much more positive conversations as we move into the second half of 2024. Now, in getting to know our clients, I've heard some fairly consistent messaging from them in terms of the relationship with our firm. And it doesn't matter if it's our QC team or our due diligence team, they basically have a high level of trust in what we're putting out from a quality perspective, and the level of service they're receiving is just as equally excellent. So we're very, very bullish on the second half of this year in terms of our growth prospects.
Love to hear the positivity. Thank you for that. You're always good for that, though, Jeff Flory.
Well, and one of my heroes, and did we talk about this? Ernest Shackleton. Did I ever tell you the Ernest Shackleton story?
I don't think so, but I'd love to hear it.
So turn of the century, 1914 or so, Ernest Shackleton sets out with a crew of 54 down to Antarctica with the intent to basically transverse Antarctica on foot. Before they even reached land, they got blocked in a thing of ice, and basically their ship was crushed and sank. And so you had 54 folks out in Antarctica with no way to get home for something like 433 days or something like that. And over the course of that time, no one passed away. Everyone kind of made it to safety. And a lot of the leadership lessons that came from that were from Ernest himself. And it was really around realistic optimism. And then you know, I have a lot of optimism, but there's also, you have to blend it with realism, because you have to be able to present a realistic picture of what you're up against, and then believe in the fact that you're going to overcome those things. So it's a great story, quite frankly.
And very applicable, I think, to the last, 18 months of life in the mortgage banking industry, right?
Indeed,
That's great.
indeed.
That's great. You know, your company, QCLI, provides a wide range of services for lenders. I know it has a great reputation, but we're kind of fresh off of our Mortgage Innovators Conference. So I'm interested to hear, how are you using AI to provide services to your clients?
No, it's a great question. And it's part of the reason that I went to the Mortgage Innovators Conference myself, because I wanted to see what kind of things were being thought about in terms of how to make the process more efficient. And I think we talked about this a little bit the last time I was on with you, and that my own personal life, I'm more of a fast follower than I am kind of a bleeding edge guy. And AI really has a variety of subcategories, from things like OCR, document recognition, income calculation, tools for chatbots for facilitating the customer experience, and things like that. And QCLI has actually embraced the concept of leveraging technology that helps facilitate our processes while continuing to deliver the highest quality audit possible. Like, we've had an OCR technology that's been in place well before my time that basically does, for lack of a better term, a rack and stack of the file that comes in. So we get that blob PDF that comes in, we run it through our OCR engine, and it puts it into an order that makes sense for our auditors, so that we can actually run through more consistently, and it leads to better findings as well, because everything's kind of in its place when it comes to that technology. And we've trained it over several years, and so it recognizes a multitude of documents. It's not something that we go out there and market, because the primary function of that tool is to really identify stack customer's loan file in a manner that's consistent for us. And so it's really an internal efficiency tool for us, more than it is kind of a value add for our clients, other than the, kind of the quality aspect. Now, in our due diligence group, the technology needs are a little bit different. And while we'll be making a little more formal announcement later this month on this, I can tease that we've been working with a partner on deploying some technology to perform some of the rote functions of the due diligence process, and free up our auditors' time to maximize the time they spend actually looking at files. And this technology will help us extract certain data from, a variety of formats, like PDF, JSON, CSV, et cetera, and perform validation checks and verification checks of that tape data against the source of truth data. And then to keep the original file structure, so we tell our clients, for example, hey, there's an error on the note on page 347 of your file, there's consistency in that. And so we don't have to send them our restructured file back. They can quickly remediate based on the original structure of what they sent to us. So there's going to be a time savings for us and an ease of process for our clients using this technology. Naturally, this initial project has already spawned some other ideas that we can leverage across our organization in terms of potential new product offerings that we think can help us provide new and efficient audit services for our clients.
That is impressive, and the efficiency of mortgage quality is always important, but I think in this market, I hear from my lender members that mortgage quality due diligence is top of mind for them. So great work that QCLI is doing, and excited to hear about what some of the new products you might be launching look like. Kind of switching gears, I know one of the things that you and I kind of connected on when we first met all those long years ago is the fact that you keep your finger on the pulse of what's happening from a legislative and regulatory perspective, even when you weren't necessarily in the role you are with leading a compliance company. But I'd be interested to know kind of what you feel is top of mind for regulators right now.
I will say I'm only able to keep my finger on the pulse of things because we have people like Indira McDonald, right?
Right.
Quite frankly, I mean, I sit on those legislative calls, and I sit on the MBA's legislative committee, and quite honestly, I sit there in awe, not only of the work that Indira does, the fascinating legislation that comes out of the state of California. But moreover, I sit in awe of some of the great legal minds that you have on that call. And I'm a kiddie with swimmers on that one in terms of the people that you have that participate on that. But when I went to college, my original intent was to get my bachelor's, which I did, and then head off to law school. But after 4 years of school at Santa Barbara, I decided I didn't want to do that. So I think I went actually straight into the mortgage business. And so I think I like sitting in the bleachers on the legislative call because it helps me feel a little bit lawyerly, I guess. Maybe that's part of the reason I like to participate. But the question itself is pretty timely. And again, coming off the heels of legal issues in San Diego, and of course, you heard Rohit Chopra's comments at the National Secondary, just a few weeks ago. There are a few issues that have some attention and focus because there's a subject we could spend, well, quite frankly, we could spend a lot of time talking about all the issues, but there's a few that are kind of pertinent here in California. And first, from California's perspective, the hot topic is obviously hazard insurance, right? And the decreasing availability of it. The top 12 insurance companies in the state write about 85% of the insurance policies in the state of California. Several of those companies have either paused writing new policies, they're limiting the total number of policies that they'll actually write, or they're restricting their underwriting only to low risk areas. And because California has limits on how rates are set, I think the statistic I read is that insurance companies are suffering something like a direct underwriting loss of 13 to 14% on every policy written in the state. Obviously not sustainable, and so that's why they're pulling back. The result, more and more policy seekers are resorting to the California Fair Plan, which was designed 50 years ago as kind of an exchange of last resort, but it's quickly becoming more significantly leveraged here in California for home buyers. So that's one. The second, and obviously speaking of AI, is CFPB very, very focused on AI's benefits and pitfalls. Lenders are going to be held accountable for their use of AI technology, validating that it doesn't violate federal laws around non-discrimination, fair competition, consumer protection, et cetera. And to the point, does it make the customer experience better? And I think the data shows presently that things like chatbots may help with, call it tier 1 level questions. The more complex issues consumers face may lead to a frustrating experience. It's kind of like the automated voice systems when you call someone up, right? Personally, I'm at the point where I'm rapid firing that 0 key to get to a live person, or I'm just saying agent, agent, agent when I get on the phone, because the initial kind of process you have to go through is very inconvenient. It doesn't get to my very specific question. So I think there's ways to do things more efficiently with that technology. And speaking of AI, and I'd be remiss if I didn't do this, for all of you listening, there's still time to call your local California rep and ask them to oppose AB 2930 on automated decisioning tools, or to support the multi-agency supported amendment to carve out our DU and LP and other federally accepted automated tools from this bill. So that's my little pitch right there.
Your little pitch.
I think the other thing that's definitely top of mind for originators is the NAR settlement and its potential impacts on the real estate market. And the reality is that in a real estate transaction, a buyer needs to have competent representation. My wife and I bought a little house down in Houston for my son last year. He's going to school. And even as someone who's been in the mortgage market in and around real estate transactions for over 30 years, I was very, very thankful that I was able to secure a trusted advisor that helped me through the process and represented my best interests. And I would suggest that this is especially important in the case of first-time home buyers or folks that may not be as adjacent to the real estate market and need more attention and handholding from their representative. Now, the NAR settlement has thrown all of that into a state of uncertainty, and until that all gets sorted through, it could have a potential dampening effect on the market. Those are like the top three.
Those are great points. should share that we are California MBA, speaking of the California insurance crisis, we are literally right now launching a major PR campaign to highlight how California insurance crisis is negatively impacting the real estate finance industry in particular, and urging our insurance commissioner to take more immediate action. So more on that as it develops, but I'm sending information out about that now. Looking for a lot of testimonials from lenders that are seeing borrowers drop out of their potential to be homeowners because of the insurance crisis. So great outlook on what's happening and what the priorities are for our regulators, Jeff. Speaking of which, you were recently at our legislative day last month and served as a team leader. Thank you for that. It's always a little bit important job, but a little like herding cats. And so I have very select people that I can ask to do that. So I appreciate that. And you were also a leader, I think, at the National MBA's National Advocacy Conference, which is a fantastic event. I'm sorry that I missed it this year, but if anybody has a chance to go to NAC, it's amazing. Can you share with our listeners why you prioritize advocacy for our industry?
Certainly, and it's timely because NAC, Legislative Day, every legal issues, all those things going on. I've always believed that it's imperative for us in the business to represent the needs of our business. And having participated in Legislative Day as a leader and in National Advocacy Conference as a state leader, you get in there and you see that the thing that sticks out to me the most is that we're buzzing around the office either in Sacramento or in Washington, and there are swarms of advocates that are mulling the halls and visiting and doing all this, and people just looking for that 15 to 20 minutes with their elected representatives to help educate them on the nuance of the issues at hand. And that's the key, because it's the nuance where it really makes a difference. Because you look at things from a 50,000 foot level, as these legislators are, and they don't understand the downstream impact of kind of the subtleties of what the legislation is that they're writing. And so it's very important to get out there and meet with them. And it's actually rare when you actually get to meet the actual legislator. Usually you're meeting with one of their staffers, and the staffers generally have a better understanding of the issues that you're in there to advocate for. But even those staffers, they've got a wide swath of things that they have to be responsible for, and we are the experts. We know what's best for the consumers in terms of, in general, I'm going to say in general, we are the experts, and we know what's best for the consumers in terms of what they're trying to write, and it's absolutely important for us to be there. There's no conceivable way our legislators can effectively think through those potential effects, and while I'd argue for a more thoughtful and less voluminous legislative process, our time in either Sacramento or DC helps educate those that mean to impact our industry. And at the end of the day, I prioritize advocacy because I don't believe you really can't complain about what happens if you're not in there trying to stir the chili and educate and influence the outcomes.
Right. Excellent. Thank you so much. And I appreciate that. Also a plug, speaking of all the great things you just mentioned, how we should all be pushing and supporting our industry. If you're not a member, or have not enrolled in the Mortgage Action Alliance, that is incredibly important for us, both at the federal level and at all the state levels. California MBA has used the MA network to advocate on specific issues. We likely will be using it on AB 2930, as Jeff mentioned earlier, and possibly on our insurance crisis. So if you're not a member of Mortgage Action Alliance, today is the day you need to log into the MBA and get signed up for that. Jeff, always a great guest. Thank you so much for being on Connect. I really appreciate it.
Oh, I always appreciate the opportunity, so anytime.
And thanks to all of you for joining us today. To access any of our past episodes, you can follow us on our YouTube channel. We're also available on SoundCloud, Apple Podcasts, and Spotify. That's it for this week, and we'll see you next time on Connect.